Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. All right, time to look at commodities. We have the dollar still in a very tight range. We pretty much had our high, low, and now 5 days of sideways trading. If we wanted to zoom in a little bit, the 12-hour time frame, we can see it's pretty much in equilibrium. We did have a little bear break by a few pennies with no follow through. So we're going to be watching for a break of this range first thing, either Sunday night or Monday. I'm looking at key short-term support of 98.14. If that level breaks, it's a bear break, and the bulls need to see a break of 98.69. This will have some potential implications on precious metals. We've been seeing recently that it's really the market that has a bigger impact, the S&P 500, with what gold and precious metals are doing, but certainly worth watching what the dollar is doing as well. So if you're bullish gold, you want to see a dollar bear break. Gold had a bull break on Friday, and market weakness was a big part of that, where we had some news come out midday in the market that led to a significant pullback. We were in a 12-hour equilibrium on gold that broke bullish by getting over 15.12 and 15.13, and now we're looking at 15.24 and 15.28 as short-term resistance levels. So the bulls are looking and saying, okay, is this our weekly high or low down at 14.83 after a couple weeks of consolidation and the strong close at the end of the week? We will need a little bit of follow-through, but that is what the setup currently is, and that's the new line in the sand. As long as 1483 holds, the bulls keep full control of this weekly uptrend, and we're going to be looking for a daily higher low to form, anything above 1483. Silver is still in its 12-hour equilibrium, so if you're bullish miners, you want to see silver break bullish as well to have all wind at the back of the bulls. So we have our high, same setup that just hasn't broken, low, lower high, higher low. So key support is 1749 and key resistance is 1807. And patiently waiting for a break. Same question. Has our weekly higher low been set? Bulls need to see a break of that tight range to increase the odds in their favor, because that would be a little daily higher low and higher high. And a daily trend change is the first indication that our weekly higher low has been established. Bull miners had a strong day. Inside bar bull break. We took out the high of the last 3 days on Friday. So getting over 33.49 was a nice short-term signal, and now we're looking at 35.24. So same thing, weekly time frame. Well, it's not the same thing, because gold and silver are in a weekly uptrend, and we lost the higher low pattern on the bull miners. So I would be scouting for the potential of a lower high on this weekly chart compared to 45.10 because of how much the miners did pull back. And obviously this is a leveraged ETF. Let's go to the non-leveraged version, GDX, and from that high to the low, we pulled back 14%. And if you look at gold, from that high to the low, we only pulled back 4 to 5%. So a very big difference in the size of that pullback. Oil is trying to form a daily higher low, but it's struggling to change the 4-hour trend. The 4-hour trend change is the first indication the daily higher low has been established. So a little bit of a base of support in the upper 57s, but unable to break resistance. 59.49 was resistance. We got up to 59.22, dropped back down. So still a scenario where it could be a little weak bounce attempt and then drop down to a lower low. If we were to break 57.64, that would be a red flag for the oil bulls. But if that level can hold, and if the bulls can get a little bit of follow through, we'll be looking for a lower high compared to 63.33 and anticipating a tightening daily range. And that's something that's important to recognize, where we had a tightening range in the metals and miners that is just now starting to try and break bullish. We have oil setting up for the potential of starting to see a tightening range. So if trading commodities, we want to be recognizing these tightening patterns and then jumping around to where they break, because that's when the volatility spikes do occur. So patiently waiting for the miners and metals all last week. They finally got a break at the end of the day. We'll look for follow through this coming week. And now we're watching oil to see if it's going to start forming a tightening range for this coming week. Natural gas pulling back, setting up for the head and shoulders pattern potential, where we have our left shoulder with the neckline at 251. This is our head. And now the bulls, if we do bounce Sunday night, Monday, maybe even into Tuesday, We'll be looking for a lower high to form compared to our top of 271. And then it's all about this neckline of support, because if that breaks, we zoom out and look for weekly consolidation. It's a big, clear bearish reversal candlestick on the weekly chart. The question now is, can we maintain the uptrend? And if not, how much weekly consolidation are we going to see? So looking at it on the 4-hour time frame, we saw a lower high, hit exponential resistance, drop down, pretty much a double bottom at 251 right now. Short-term resistance is 2576. Have to break that level if we're going to have this 251 level hold, at least in the short term. So that's where we stand overall in the commodity space. Not a ton of glaring setups aside from that bull break in the miners just on Friday. Aside from that, we're going to be watching for natural gas potentially. The bears are already out. I would like to see a bounce to allow for a nice fresh bear entry to top fish the high and to allow for some of these RSI levels to cool off a little bit, as the 4-hour RSI will very quickly be oversold if we do break this 250 previous resistance, now support level. So that's where we stand overall. The S&P 500 saw a little bit of weakness at the end of the day on Friday. If that weakness carries over into this coming week, we'll look for the precious metals and bull miners to help get some follow through with that weakness in the market overall. Hope you have a good weekend, or had a good weekend, and we'll see you tomorrow.